The Nigerian insurance sector continues to underperform with little or no returns to shareholders, a phenomenon that has prevailed despite the several rounds of regulator-inspired recapitalizations and mergers. Earlier, I spoke to Oyebola Farideh, analyst at AGH Capital, to discuss the needs to attract investments into the sector.
The insurance sector in Nigeria has struggled a bit following the several rounds of recapitalization that you've mentioned. For me, in my opinion, I reckon the level of reporting is one of the reasons why there is a bit of struggle in that sector. Typically, money will chase measured risk and return. And in a place where the investors do not quite understand the risk that it is they're taking on, it's a bit difficult for them to put money in that sector. So a bit of reporting challenges, and also the market not opening up to some level of expertise in terms of foreign play.
I just wanted to get to that. Your thoughts on how important it is to have foreign investors partner with local investors in the insurance space today. We see quite a number of new products, or should I say products, that are offered in markets like South Africa. We don't see them here. So your thoughts on the importance of linking with foreign investors and driving growth or new products in our market?
Critical, very critical. We've seen the need for this in this sector. It is important to have some degree of foreign play. We cannot underplay the level of local knowledge that the current operators have, but it is important that the market opens up to partnerships, to joint ventures with foreign players, especially those who have done this business properly and very well in sub-Saharan Africa. And that will help bring in some level of expertise combined with the local knowledge that the current insurers have to help deepen the level of insurance penetration in Nigeria, which is quite low at the moment.
Well, we've seen a few partnerships in the past. Metropolitan Life, I know, had some links with UBA in the past.
Absolutely.
We've seen, I think Old Mutual is now coming to the markets. What we're hearing is that they're acquiring a company in Nigeria. So it's not like we haven't seen anything at all, but yet we continue to see these insurance companies underperform. In terms of penetration, looking at the premiums relative to GDP, clearly they can do much better.
Well, yes, you're correct. Even Salam is in partnership with First Life Insurance. But overall, I think it has to be an industry-driven initiative. Yes, we've seen recapitalization happen. We've seen different mergers, but it has to be one in which the different operators in the industry now gear towards driving this change in the industry. We have to see them lead this drive in marketing, because if people don't know about the products, it's very difficult to actually get the awareness level high. It's a bit difficult to get them to buy what it is they do not know or what it is they're quite skeptical about. So we need to see some level of some initiatives in the industry that increases the level of awareness of the populace. Nigeria has the numbers. The demographics is just right for a retail-based kind of product offering, which currently is not being serviced in Nigeria.
All right, so let's move on to what is available, the stocks on the market. What are your favorite picks in that space? Many people point to the likes of Mansard, Custodian and Allied Insurance, ICO Insurance, standing out in that sector. What are your thoughts?
Well, the picks are few and far in between. We see a sector with about 29 stocks, and about 70% of them barely trade above par. You've on the tip of our fingers, we can both pick the kind of the stocks we will take in that sector. But overall, I still perceive that from what I see on the market, the sector is still relatively cheaper than you would find in a market like South Africa. Price to book levels on the average for this kind of decent picks that you've mentioned are still around the sub-1 levels, with PE levels also at around 8, for this year-end, estimated year-end. Meanwhile, in a place like South Africa, you'd find PE levels at about 2.5 times of book, and price to book at about 2.5 times of book, and price to earnings at about 15. So the market still remains cheap for the good companies that are well run, that have very good reporting standards, with the advent of IFRS, that have a good plan, and that also have very, very good investment management plans.